Let's switch gears right now. A day after that historic sell-off that we saw on Wall Street, we had it as breaking news yesterday. We want to talk about stocks and how they're rebounding a little bit this morning. So we're joined right now by Michael Carlin. I want to thank you for being with us, Michael.
Good morning.
He's the president of Henry+Horne Wealth Management at Scottsdale and Shea. I want to real quick get to the markets right now, show everyone what the Dow is doing if we can, because just a few moments ago when we checked, here we go. Looks like we're up about 580 something points. Earlier, just a few minutes ago, it was up some 900 points, but so far it looks like stocks are rebounding nicely. So
Absolutely.
Paint the picture for us. Why do you think that's happening today?
Not uncommon. Yesterday was an epic sell-off. Epic sell-off. The
biggest point drop since 2008, right?
Yeah, well, the point drop, biggest point drop ever, but biggest percentage drop since 2008. So there was really a moment of reconciliation and fear where the market kind of, it was in this realization mode where how bad is this going to be, and maybe the economic fallout is going to be worse than expected. Because let's just make sure everyone is aware. The market looks forward into the future. The market is thinking about what's going to happen 9 months from now, and it's reacting today. So as those expectations change of future earnings, the market's going to react immediately. But as the reality sets in, as things continue to evolve and develop, that's when you'll see the market moving differently. And today's a nice rebound.
And I know sometimes when we see those massive sell-offs, investors sometimes get a little nervous and they want to pull their money out, but you're saying keep it right where it is.
Well, okay, so yeah, and the alarm is huge. So what I did is I brought a chart that I bring up to clients all the time. And on the chart, essentially what it shows is that if you look at the last 20 years of the market, and you just left your money invested, there's been some really difficult decades the past 20 years. Your rate of return would have been a positive 5.5 plus. But if you missed the best 20 days of the market, and today looks like it would have been one of the best 20, if you missed the best 20 days, your return goes from positive to negative over a 20-year period of time. So, again, I'm saying that the way you manage your money is you want to take risk off the table when stocks are high, and you want to be buying more when things like are happening today.
That's a bargain. Think about it like that. Of course,
Correct.
If they go lower, you can buy more of those, and then hopefully they go up one day. The president is expected to meet with some leaders on Wall Street today and tomorrow to talk about some financial stimulus packages. Two questions here. What do you think could be some of the proposals here, and is it enough? Do you think it would work?
Well, anything that the government does, the market will look upon favorably, and that's really that's the big lesson. And the types of things that you're likely to see is that the industries that will be most impacted, and look no further than transportation and the energy sector, which have both been hit extremely hard. And we're actually seeing some fallout in the banks too. So if you're going to see some kind of support and help, it'll likely be within the banks, within travel, and certainly within energy. Yeah,
and bring up a good point, because we're seeing those industries, especially with the concerns over the coronavirus, they seem to be hit the most. All right, Michael Carlin, we are all out of time. Thank you so much.
No worries,
Henry+Horne Wealth Management in Scottsdale. I don't think this will be the last time we talk to you over the next few months. Yeah,
I'll see you
thank
soon.
you. We appreciate your time.
Thank you.